We were talking about Mitt Romney and
Right.
the 15% plan that everyone's talking about.
Uh-huh.
What are your thoughts there?
Well, first we need to understand how our tax system works. And we have investment income and we have earned income. So earned income would be what shows up on your W-2. If you work for somebody and they pay you on a regular basis, you get a W-2 at the end of the year. Investment income is going to be from dividends and capital gains from stocks, and then from interest from bonds. And what's really weird is that interest from bonds is taxed at your income tax rate, which is what W-2 income is taxed at, whereas dividends and capital gains have what we call preferential tax treatment. You have a lower tax rate. The top rate that they're taxed at is 15%, which is quite a break when you're looking at that versus a top rate of around 35% that you might be facing. That's a huge savings. And so the big argument with Romney is really twofold, and we'll start with the way he's been living now, because he has not had as much earned income as he has had investment income. It's all relative, I realize, but when most of his cash that he lives on comes from investments, then his top rate is going to be around 15%. Most of us don't experience that. And even when we go back to his Bain Capital days, because it was a hedge fund, most hedge funds, they pay their managers in such a way so that most of that income is counted as investment income, as capital gain. So again, a top rate of 15%, which does seem a little bit unfair. There's this big argument over we should just call it all income, because it doesn't matter whether it's investment or earned income. It's all income. It's what we live on. But certainly in my business as a financial advisor, we use the tax system and the tax code to try to keep our clients' tax bills low. That's what we do, and still give them the money that they need every month. So that's an argument we're going to have. And some people say, well, but those dividends and those capital gains from that stock, those companies also pay corporate income tax. So you have a double taxation going on. So the corporation pays tax, and then when they send it out to their investors, the investors pay tax on that. And that is true, but there are a lot of corporations who use those rules and loopholes to keep their tax bills very low. I would like to see us with a flatter tax code and get rid of some of the loopholes. Now the problem with that is some of those loopholes we really like, and some of those loopholes reward certain segments of our economy. For instance, if you own a house and you get the deduction on the mortgage interest, that is very valuable. It makes that money very cheap, especially with rates below 4%. So a lot of mortgage brokers out there and real estate agents would be very unhappy to see that loophole go away. And we certainly wouldn't want to do that right now with an ailing real estate market, to give them another blow at this time. So there's all this fight over all of these favored loopholes that drag the system down so we look like we have these higher rates, and yet if you know how to work the system, if you have good CPAs, if you're more dependent on investment income than earned income, you can end up paying a very low rate overall. And I think what we need to do is look at the overall picture and say, what do we want government to be? How much is that going to cost us? And how do we all fairly pay for that?
A few of the Republican candidates have been talking about a flat tax. What are your thoughts about a flat tax?
I'm not sure how that's going to work. I've seen some of the proposals in the past. Steve Forbes was the famous one who proposed a flat tax many years back that never got off the ground. I think there are a couple of problems with that. First is that we have built up a tax code that has supported an entire industry of accountants and attorneys who figure out the code, so we're going to have to get through them. I would like to see it not quite so complicated. If you start introducing a flat tax, then you might end up with something that's very regressive, meaning it's going to hurt our lower end people because they spend more of their income. And we also have to think of what kind of tax arrangement will encourage economic growth. And that's the argument of taxing wealthier people more than lower end people, because if you give an extra dollar to somebody who's very wealthy, they're more likely to save it than spend it. You give an extra dollar to somebody who's on the lower end, they're more likely to spend it. And it is that spent money that ends up causing us to have economic growth.